How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel and smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of this video. Click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. I'm going to also send you a Webull tutorial video to walk you through how to use the Webull app to make your first trade. All you got to do is send me a DM and I will go ahead and get you set up. Now you guys can know it's been a long day because I'm telling you to send me a DM when my Instagram account shut down. So scratch that. Don't send me a DM. Send me an email. And my email address is down in the description box of the video. I want to also walk you guys through why I believe there could be a housing market recession. I got two sources that I want to quote. And again, no source is 100% sure of anything. These are two credible sources. They're two big to fail banks who have put out some information lately relating to the housing market and how the housing market could potentially cause a recession. And we're going to talk about that. We're definitely going to talk about that because I think that's something that we certainly should concentrate on and be aware of, because these interest rates are starting to cause some recession damage. And I'm talking about 30-year fixed rate mortgage rates. The housing market, guys, is made up of more than just buyers and sellers. You do understand that, right? There are a lot of Americans. There are a lot of Americans who depend on the housing market for their livelihood. And a lot of those folks are panicking right now because if homes aren't being sold, if new construction is not going up, then there are a lot of folks who ain't making a paycheck. Because you got to understand, a lot of these people who depend on the housing market are commission based. They eat what they kill. So if they're not selling houses, they're not making any money. And that's where these two credible sources, Bank of America and Wells Fargo, have come out and said they believe there possibly could be a recession that is going to be caused by the housing market. If we go back to 1980, can anybody tell me what interest rates were in 1980? I'm talking about your 30-year fixed rate mortgage rates. What were interest rates in 1980? They were in that 13% range, guys. We did have high inflation and we had high unemployment, right? So we had high inflation, high unemployment, and 30-year fixed rate mortgage rates were in that 13% range. How would you like to live in that era? Yeah. But fast forward to today. Well, before we fast forward to today, let's talk about how long did it take interest rates in the 1980s to start coming down. Remember, they were 13%-ish. They were 13%. in that area, how long did it take them to start coming down? 2 years? 5 years? 7 years? 10 years? Interest rates didn't really start coming down, guys, until 1990. So for 10 years, from 1980 to 1990, interest rates came down from 14% down to 10% in a 10-year period. And guess what people were saying back in 1980? Pretty much the same thing they're saying now. Oh, don't worry about it. Middle of 1980, rates will start coming down. Don't worry about it. They won't stay at this 13, 14%. They'll start coming down. They'll start coming down, but they didn't. Does that sound familiar? And I'm one of the guilty ones. I'm one of the guilty parties that has been saying that the Fed will reduce short-term interest rates in June of 2024. But does that necessarily mean 30-year fixed rate mortgage rates will come down as well? Technically, in my opinion, they should, because they're indirectly tied to the short-term interest rate, AKA Fed funds rate. But in 1980, when interest rates were 13, 14%, it took them a full 10 years, guys, to come down to 10%. So the panic comes in, and where Bank of America, Wells Fargo, and I'm paraphrasing, and again, go out and look at the articles yourself so that you can read it for yourself. I'm giving you my cliff notes. I'm giving you what my interpretation of those two articles were, where they were saying, yeah, there could be a housing market recession, right? And, you know, what they're basically saying was in the 1980s, similar, same thing happened. Very similar, same thing happened. Right? Same thing happened. That's what's happening today. Now, fortunately, our interest rates are only around 8%, not 13 or 14. But even at 8%, you got to understand what's happening to the housing market, especially to individuals who make their living in the housing market. When interest rates are 8%, guys, affordability goes down the tube, right? It goes down the tube. And the reason it goes down the tube is because people can't afford the monthly mortgage payment with an 8% interest rate. On top of the 8% interest rate, you still got high prices, right? You got high prices and you got 8% interest rates. So needless to say, the activity in the housing market has slowed down tremendously since 2021, right? It started slowing down in 2022 when the Fed started increasing short-term interest rates. And now you fast forward to today, it's pretty much at a snail's pace, right? And that's hurting the people who make their living off of the housing market, because realtors, mortgage brokers, and builders. Now, I'm not talking about your national builders. I'm talking about mom and pop builders are suffering. You got mom and pop builders, real estate agents, title companies, mortgage brokers, everybody that's connected to the residential housing market is suffering. And that's a lot of Americans. So if those people don't get a breakthrough at some point, guys, a recession could be triggered by the housing market. One of the things that Mortgage Brokers Association, Realtor Association, National Home Builder Associations have started writing letters to the Federal Reserve and asking the Federal Reserve to not raise short-term interest rates anymore. Remember, the Federal Reserve hasn't raised short-term interest rates in 4 months. I wonder why. Maybe that has something to do with it, because these associations that are connected to the housing market are sending letters and basically saying, look, guys, I understand we're in inflationary times, and I understand you're jacking rates to bring down inflation, but you also got to understand you got a whole section of people in this housing market who don't know when their next check is coming. And at some point that catches up to us, because you got to remember, guys, the housing market is a large part of our economy. It's a large part of it. Shelter costs is like 1/3 of inflation. Now, shelter costs also includes rent, right? That's the bigger piece of it. It's not really, home ownership. It's mostly rent, what price someone has to pay for rent, and is that escalating? That's mostly what the shelter cost is when you're talking about inflation, but still, the housing market plays a part of that. So yeah, Wells Fargo, Bank of America, basically saying, hey, be on the lookout for this. This, it's not etched in stone that'll happen, but there's a possibility that it could happen if interest rates remain high, prices remain high, and ultimately affordability remains low. If affordability remains low, then less transactions will happen. Now, we already know your upper 20% of the wealthiest people in this country are still buying homes and second homes and third homes, and they're just doing whatever they want to do because they have assets, right? They have the wealth to be able to do whatever they want to, and they have the wealth to absorb a higher interest rate if they choose to go out and get a traditional mortgage. But most of your 1%ers, they don't get traditional mortgages, right? They're not like you and I, where we got to go to a normal bank and get a traditional loan where they're going to price it at 8%. Most of your wealthier folks don't do that. They use their assets as leverage, as collateral to negotiate with whoever their lender is or their investment banker or whoever. They will say, hey, I got 5 mil, I got 10 mil, I got 20 mil, I got 50 mil, I got 100 mil with you. I want to pledge or leverage those assets to get a lower rate. And, most of these institutions that take care of money for these ultra wealthy don't want to lose that money. So they'll say to themselves, hey, okay, we'll give you a discounted rate. We'll give you a preferred rate, right? We'll give you a VIP customer rate. You and I can't get that. We got to go in and get the normal 7.5%, 8%, whatever the going rate is. We're not going to get that special rate because we don't have the assets that these ultra wealthy people have. So the majority of the people that are buying homes or would be buying homes are on the sideline because they just don't have the income or the assets to be able to swing an 8% interest rate on their mortgage. They just don't. Coupled with prices, right? So you got prices. I would say prices have doubled since the pandemic has ended. I would say prices have doubled. I can remember back in 2020 when the pandemic initially broke out, and then the neighborhood where I was living at the time and one of the adjacent neighborhoods, Lennar was in that neighborhood when the pandemic broke out, and you could get an easy 2,500 square foot, three-car garage, pool, gated community. You could get a place in that 350 range. Now you go in that same community, and those places are in the 725, 750 range 3 years later. That's why people can't really afford to buy right now, coupled with high interest rates. And that's why Wells Fargo and Bank of America are saying, hey, pump the brakes. If something doesn't change, there's a possibility there could be a recession caused by the housing market, because so many people make their living in the housing market. Like I said, you got realtors, right? You got title companies. You got real estate attorneys that specialize in residential transactions. You have mortgage brokers, right? And then again, like I mentioned, you got your mom and pop home builders, not your national home builders, just your mom and pop home builders. So you got a lot of folks depend on the housing market to make things happen. I met with my realtor today who's going to be listing my house for sale, my old house that I lived in prior to buying this house. And they were out taking some pictures, and I was talking to her about the market and what's going on. And I just said, I'm fortunate that I bought this house 11 and a half years ago and only paid, $395 for it. This was 11 and a half years ago, guys. I paid $395. And I'm gonna be listing the house for basically $800K. So double what I paid for it. And the reason I'm able to do that is because of what? Low inventory, number one. And then number two, the community that the property is located in is built out. So there is no new construction can go in there. It's all built out. No more lots. So if someone wants to live in that centrally located area in a gated community with 18-hole golf course, full amenity center, full country club, and be centrally located to everything. I'm talking about to an international airport, which is 2 miles away, the international airport. Main thoroughway, I-75, international highway, boom, right there. I mean, it's a stone's throw away. And then every other thing, the beaches, everything is centrally located. So if you want that, then you pay what the market says it's worth. Now, also lucky for me, I know the type of people that live in that community are normally people who are retired. Now, there were some people in there like me at the time, because you remember I bought 11 and a half years ago, I was still working. There was people, but we were the minority. Most of those people in there are retired folks. Either they live here full-time or they live here part-time, right? They have a place up north, whether it be in the East, the Midwest, or the West, and they come to Florida in the wintertime to escape those harsh winters where they currently live. They come to Florida and they buy places like mine, and a lot of these people, lucky for me, are cash buyers, basically baby boomers. So for me, I'm optimistic, but that's just a small part of the housing market. And my realtor was telling me they had another listing, $5 million listing. Big old beautiful house, Mac Daddy house, $5 million. I don't know how fast that will move. It could move quick or it can move slow. It just depends on where it's located and what buyers will be attracted to it. Because you do still have international buyers who are coming in and buying up beautiful, expensive homes like that, especially if they're in the right location. But again, that's a small minority in the overall housing market. The majority of the housing market is made up of just normal everyday folk who work. They scratch up enough money to get their down payment, and they hope and pray they can get a really low interest rate to make it all work. That's why it's a problem, because with an 8% interest rate, and more times than not, it won't work. So therefore, people are on the sideline waiting. So what happens if we do get thrown into a recession because of the housing market? I think what will happen is the Federal Reserve will accelerate decreasing short-term interest rates in order to do what? Kickstart the economy or kickstart the housing market. Now, you got to be careful, though, because remember, we don't have that much inventory right now. And prices are already high. So if the Fed, they got a balancing act, guys, because if they go and reduce short-term interest rates too fast and too quick, what is that going to do? It's going to increase demand. And you guys know, if we don't have enough supply to meet demand, what happens? Prices go up. And we will be in a world of trouble because prices are already high. Remember, most of these properties, and I would say, well, I can't say for the whole country, but I'll stick to Florida because that's where I live. I'm telling you, these properties are pretty much doubled in value. Right? So then if you add more on top of that, yeah, you might have low interest rates, but you're going to have skyrocket high prices that may still exclude a lot of people. It may not be affordable. I don't care if my mortgage rate is 5%, but I'm paying 800, 900, $1 million for a house that used to be 400,000. Right? If it was 400,000 pre-pandemic, and now all of a sudden it's $1 million, guess what? My wages, my increase in my wages haven't went up as fast as home prices. It hasn't. That's what you fall into, guys. You fall into the trap of prices are up, interest rates are up, and both of them have went up higher and faster than your wages. Nobody out there is getting an 8% raise. Most Americans don't get an 8% raise, right? Most Americans don't even get a high enough raise to keep up with inflation. Core inflation is 4%. How many of you guys out there got more than a 4% raise in 2023? I'm sure a few of you did, but the majority of folks don't get a 4% raise because you got to understand that the majority of people work for someone, right? The majority of people work for someone. And the majority of the majority of businesses in this country are small businesses, is what I'm saying. Not these big old national conglomerates. Most businesses in the United States would be considered small businesses. And most small businesses, depending upon how many employees they have, cannot afford to give people a 5% raise every year, 8% raise every year. They can't. Or they won't stay in business. These are closely held businesses, privately held businesses. They're not public companies that can go out and raise $1 gazillion and do whatever they want to do. No, they're not like the big boy publicly traded companies. These are privately held companies. And these privately held companies can afford to give 15 or 20 or 30 or 40 employees a 5% raise every year. So guess what? If that's the majority of businesses, that means the majority of Americans work for small businesses. So therefore, I know most Americans did not get a 4% or 5% raise in 2023. Like I said, some of you did, a couple of you might have, but not the majority of y'all, because small business owners can't afford to do that. They wouldn't be in business, right? So my point is this. I can see where there could be a housing market triggered recession. Do I think it's likely? No, because I think the Fed has been receiving these letters from these associations that are tied to the housing market, and I think the Fed is listening. That's why the Fed hadn't increased interest rates in 4 months, and inflation is still kind of trickling itself down, which is good news for the housing market. The bad news for the housing market goes back to how I started this conversation talking about interest rates in the 1980s. When interest rates were 13 or 14%, and I asked you guys, how long did it take those interest rates to come down? They came down from 13 or 14% to 10%. It took it 10 years, from 1980 to 1990. And in 1990, rates were around 10%. My point is, if rates are 8% today, I hope and pray it doesn't take 10 years for rates to come down to 5%, is what I'm saying. I'm hoping it doesn't, because if it does, it's going to be some pain out here in this market. It's going to be some pain in the housing market. I'm going to have some pain because my goal was to get out of the dream house in about 3 years or refinance it in 3 years and get a lower rate than what I currently have. So, hey, who knows? May not happen. Again, I prepare for the worst, but I expect the best, right? But I'm preparing for the worst just in case rates don't come down. Because if they follow the same pattern they followed from 1980 to 1990, the last time we had a real bad situation with interest rates, if it follows that pattern, it may be 10 years before rates come down to 5%. I'm hoping it isn't. Because if it's going to be, rates going to be that high for that long, I don't know how the housing market, or a lot of these folks who make their living in the housing market, I don't know how they survive. I'm going to tell you how they're going to survive. A lot of them are going to have to pivot and get in another industry. That's what they're going to have to do because they're 100% commission, guys. These real estate agents are 100% commission. These title companies and these real estate attorneys who specialize in residential real estate, and when I'm talking about title companies and real estate attorneys, these are the people who actually transfer the title or the deed from one owner to the new owner. That's what they do. They're a critical part of the housing market or any real estate transaction, right? To be able to get the title correctly transferred or the ownership correctly transferred. So they're in trouble. Real estate agents are in trouble. Mortgage brokers are in trouble right now, just to name a few. Like I said, title companies, real estate attorneys, in trouble. So right now, they are asking the Fed to pump. Matter of fact, they want the Fed to start reducing. Yeah, they've even went as far as saying, look, Fed, reduce. Because I keep telling y'all, long-term interest rates are indirectly tied to short-term interest rates. Because I know a lot of people will argue that. Oh, no, they're not. Short-term interest rates have nothing to do with long-term interest rates. That's not true. They do. They do. The higher short-term interest rates go, right? The higher they go, what happens to Treasury bills, notes, bonds? I'm talking about new issue, not the existing ones, but the new issue. They go up. They go up. So the higher rates go up, the higher treasuries go up. But what happens to the 30-year fixed rate mortgage, it competes in the secondary bond market. It doesn't compete with new bond issues. It competes with existing bonds in the secondary market. Investors buy those two investments. They buy existing bonds and they buy 30-year fixed rate mortgage bundled up investments, right? And they compete against each other. And normally when new treasury bonds are going up, what happens to existing bonds? They typically trade down, right? They trade down. And when they trade down in the secondary market, guess what happens to the 30-year fixed rate mortgage? Since they compete with each other, they trade up. So when existing bonds are trading down because of new bonds being issued at a better price, higher interest rate, why in the world would I buy your old bond at a higher price and a lower interest rate when I can go get it at a better price and a higher interest rate brand new? So existing bonds typically start going down. And then what happens? These 30-year fixed rate mortgage investors who bundle up their mortgages and sell them off, they start increasing their rates. So they attract more investors. But guess who pays the price? You pay the price, right? Because you're the end user for that mortgage rate. They just taking your mortgage. They take 1,000, 2,000, 5,000, 10,000, 20,000 of these mortgages. They bundle them up as an investment and they sell them off to investors. What investor ain't gonna want a 7% return on his money? 8% return on his money. Investors are gobbling that stuff up. So my point is, if we can get the Fed to start reducing short-term interest rates anytime soon, that means what? Treasuries will start coming down as well. New treasury issues. New treasury bonds will come down in price. And then that gives the secondary market bonds a chance to be able to be sold and not be looked at as the red-headed stepchild, right? And therefore, what happens in that position? Mortgage rates come down. So all I'm telling you is as we look at what's coming, all I can tell you guys is you got to start paying attention to everything that's happening, right? Housing market is extremely important. Got to pay attention to that housing market. Got to pay attention to what's going on with interest rates, right? You got to pay attention to that, because if these long-term rates stay higher for longer like they did in the 1980s, then we could have some problems, because you're going to have a big population of people out there who depend on the housing market, that industry, that market, to pay their bills. And now these people, they're already hurting. But now good news for them, hopefully if they were smart, and 2020 and 2021 and early 2022, when they were just, rates were low and they were just selling real estate hand over fist and making all this money, hopefully they put some of that money away for a rainy day. I'm hoping that's what they did. I'm hoping they bought assets and put themselves in a position where they could weather this storm. But we'll find out here real soon, because I think in 2024, if the Fed don't start reducing short-term interest rates, it's not good enough that they just stop raising them. That's good enough for 2023. It's not good enough for 2024, 2025. We need them to start reducing, but we need them to start reducing slowly, so we don't reverse all of the gains and all of the decrease in inflation we've experienced over the last 18 to 22 months. We don't want to lose that momentum. So they can't just jump in there and just all of a sudden reduce. 75, a full percent, 1.5%, just right off the bat. They can't do that, because if they do, they risk the chance of inflation reversing itself and going back up again. Because again, when you reduce short-term interest rates, what are you doing? You're turning on the money supply. You reduce short-term interest rates, you turn on the money supply. That's exactly what you're doing. You're turning on the money supply. And anytime you turn on the money supply and people have access to more money, they have access to cheap money, they spend it. And if they spend too fast, too quick, and we don't have enough supply, we got too much demand, not enough supply, that's going to increase prices, that's going to re-trigger and re-energize inflation. And honestly, guys, we don't want that. We really don't want that. So the Fed has a tightrope act, right? They don't have a safety net underneath of them either. They're going to be on a tightrope, and they're going to have to walk that tightrope flawlessly in order to make everything work. They're going to have to walk it flawlessly. And we'll see over these next 12 months. We'll see in 2024 exactly what they do. Now, they've been saying all along that they were going to start reducing in June of 2022. Let's see if they have more pressure put on them to start earlier, maybe first quarter. I don't know. Let's see if they have pressure put on them. Like I said, you got this Realtor Association, National Home Builders Association, right? Mortgage Brokers Association, all writing letters to the Fed chair or to the Fed saying, look, guys, we're struggling here. Our folks can't make a living. Not with no 8% interest rates. We can't make a living. Y'all got to help us out here. We can't make a living. And I think that's why the Fed over these last 4 months stopped rate hikes. Because you can't just look at one part of the economy and just leave out the other parts. Housing market is a part of the economy, right? It's a part of the economy. So and a big part. So can't leave them out. Got to include them, got to look out for them. And I think that's what the Fed has been doing. That's what they've asked the Fed to do. And I think that's what the Fed is doing. So we'll see. We'll see ultimately what happens. I will be doing one thing. I'm going to have my blinders on. I'm going to have my money ready. And I'm just going to keep buying assets. I'm going to keep buying assets. That's what I'm going to do in 2024. You guys already know. I'm not going to waver. I don't care what happens. Fed keep rates high, I buy companies at a discount. That's the way I look at it. The longer you keep rates high, the more companies I can buy at a discount, the more ETFs I can buy at a discount, right? You start reducing rates, then guess what I'm going to do? I'm going to still buy. I'm just going to dollar cost average in no matter what. Because at the end of the day, guys, I got to build assets. I got to stay ahead of the curve. You got to be able to buy assets in good and bad times. I just think in bad times, I can just buy them cheaper, right? I can just buy them cheaper in bad times. But in good times, it's still a good idea to buy assets. Because in good times, if you buy the right assets, they produce more money for you. Yeah, they produce more dividends for you. Let's say in good times, I buy Apple, or I buy Bank of America, or I buy AT&T, and we're in good times. They're making money hand over fist. Guess what most of those companies who pay a dividend are going to do? They're going to give a good piece of those profits to the shareholders in the form of dividends. So what a lot of companies do when they're flushed with cash in good times, in order to reward their investors and keep their investors happy, what do? They increase the dividend. So a lot of people, why would I buy something when it's going up? Well, if you're looking to create income from an investment that you can then take and live on, or you can reinvest to buy more. In good times, if you got blue chip companies that you've bought, you can expect them to increase their dividend. That's what Wells Fargo did several times throughout my tenure with them of buying their stock. I can remember prior to the pandemic, times were great, right? This was prior to the pandemic. This was like 2019. They were paying like 51 cents per share, man. They were paying like 51 cents per share. Wells Fargo was. Per share, 51 cents per share, guys. Those were good times. As soon as the pandemic hit, bad times came for a period. You'd get some bad times. They slashed the dividend from 51 cents to 21 cents. That's how it works, though. So I keep telling y'all, either in good times or bad times, you should be invested. Right? You should be invested in good times and bad times. And that's the marching orders for me. The marching orders for me is just keep buying. Keep buying blue chip, VOO, VGT, right? And the Magnificent Seven. That's it for me. I'm going to keep buying VOO, VGT, and the Magnificent Seven. That's what I'm going to keep buying, guys, until the cows come home. Because, see, this is what I believe. In 2024, let's say the Fed start reducing interest rates. They turn back on the money printer. Then guess what? All of those companies that I'm buying are going to be more profitable. So they're going to throw off the ones that pay a dividend. Not all of them pay a dividend, but the ones that pay a dividend, they're going to throw off more dividend. And then I'm going to take that dividend and reinvest it back into buying more shares. That's in a positive scenario. In a negative scenario where they don't start reducing and they keep the money printer turned off, then guess what? I won't get a big dividend, but what I will be able to do is buy the companies cheaper from a per share standpoint. So I win either way. I'm going to win either way. That's why I keep telling you guys, just buy. You're going to win either way. Either scenario, you win. Either I'm going to get a higher dividend, which I can reinvest into buying more shares, basically free money, or the Fed don't reduce short-term interest rates and they keep the money supply off, and then the companies, I can buy their shares cheap. And then at some point in the future, when the Fed does turn the money printer back on, let's just say I go 2-3 years buying these companies cheap, and then the Fed turns on the money printer and they go to the moon. Look how much money I made, guys. If I paid 300, let's say I paid 300 and I average over the next 3 years and I pay, let's say 325 of VOO. That's my 3-year average for VOO. Let's say I buy at 24, 25, 26. And over those 3 years, I average $325 per share. But in 27, it goes to the moon. Let's say in 27, it goes to 425 a share, or it goes to 525 a share. Guess what just happened? My average over the last 3 years was 325. That was my average cost per share over a 3-year period, 325. If it goes to 425 in 2027, I just made $100 a share. If it goes to 525, I just made $200 a share. That's how you build wealth in the stock market, guys. Even in bad times. You buy as much as you can in bad times and you hold them. You hold them and you hold them. And at some point, when times go back to being good and they trade at a premium, that's when you want to exit, you exit. So that's the strategy, good times, bad times strategy. The question is, what is your strategy? If we do have a recession caused by the housing market, and I've walked you through why I believe that's a possibility. I'm not saying it will happen. I'm telling you my sources, Wells Fargo, Bank of America, came out with some articles saying that it's a possibility. Not that it would happen, guys, but it's a possibility, and they backed it up with some data. And they backed up their stance with some data. And I tend to agree with the data. If you take a look at the data, it makes sense when you're talking about if you look at the people who make their living directly from the housing market, that's a big part of our economy. Yeah, it's a big part of our economy. So it wouldn't be a surprise to me if rates stay higher for longer, these people start experiencing some real financial pain. Now, they had a couple, 2 good years, and they're probably living off of savings and taking commissions where they can get it, because there is some housing still moving. It's just not like it was in the go-go days, right? 2020, 2021, the go-go days, it was really moving. It's just not moving like that now. And if those people did not put away some of that money from the go-go days for this rainy day that we're in right now, they're in trouble. That's the reason you got these associations writing all these letters to the Fed saying, oh, please stop raising. Matter of fact, start reducing. Because we know if you start reducing, 30-year fixed rate mortgages are going to be coming behind that. It's coming behind that. So that's what's happening right now. Demand is still down. Affordability is still down. Prices are still high. And prices are still high in the housing market due to lack of inventory, lack of supply. So, balancing act for the Fed over this next year. They got to get it right. They cannot get it wrong. If they get it wrong, they're going to throw us into a full-blown recession. That's what they're going to do. If they get it wrong, inflation is going to go back through the roof. Those are their two. So they got to be somewhere in the middle. If they get it wrong and they reduce too fast, inflation goes through the roof. If they keep rates higher for longer, too long, we go into a recession. So they got to be right there, and they got to be perfect. And that's what they're going to work on in 2024, I hope. I hope that's what they're working on. But either way, like I told you guys, my directive is to buy assets. My directive is to just buy as many assets as I can buy. But blue chip, strong, historically performing assets. And then in the prime real estate fund that we're going to be starting in 2024, sometime in 2024, the prime real estate fund is going to open up. And then in that fund, we're going to just be buying residential 1 to 4 family dwellings to do our part to help the housing market, right? We're trying to help the housing market by buying real estate, by buying residential real estate as much as we can buy. Depending upon how much money we raise from investors, we're going to buy as much as we can buy to help out the residential real estate market, to help out the housing market, right? That's my goal, is to buy real estate, $20, $30 million, $40 million worth. If we can raise that much money, we're going to spend it all buying residential 1 to 4 properties to do our part to try to help boost the housing market. We're not going to be looking for no loans, because I know a lot of people have sent me, emails about, hey, if you guys need lending, if this is what we do, guys, we don't need no loans. We ain't gonna have no loans. So if we raise 30 million, we're gonna take the full 30 million and pay for everything cash, no debt, right? And that's I love that idea, right? Because I mean personally, if I'm buying real estate, I don't mind taking on debt, because I've done it for 25 years and it's good debt. I don't mind taking on debt, but it's just my debt. So if it blows up on me. I don't want a bunch of folks putting money into this fund and then all of a sudden we got all this debt, we're over leveraged, the market shifts on us, we're stuck like Chuck, and all these people are panicking, and then I can't sleep at night, right? So I'm not doing that in the prime real estate fund. We don't have no debt. We're paying for everything cash. Whatever we raise, that's what we spend, right? And the goal is buy really good properties in really good neighborhoods where people have a desire to live, right? And make profit. And then share that profit with the investors on a quarterly basis. And then these properties, we're gonna hold them 3 to 5 years, guys. Maybe longer, depending upon what we get, but normally it's 3 to 5 years. And every time we exit one, whatever the profit is from that exit, we share with the investors. So the investors got a couple of different ways of making money. They're gonna make money from the rental revenue, or the net profit from the rental revenue, right? They're gonna get that quarterly, and that's the hopes. And of course, only way you get a dividend quarterly is if you have profit. No company pays a dividend if they got no profit, right? So you gotta have profit to pay the dividend. And the profit, when I say that profit, I'm talking about rental income profit. And then when we sell, there'll be money to get as well. And then from there, boom, you'll participate in that as well. Now, I don't have all the concrete numbers, but I'm thinking cash on cash return anywhere from 15 to 30%, because I'm really serious about buying properties in locations that people have a desire to live, not in just any old place. And it has to have a proven track record of the properties increasing in value, right? They got to have a proven track record over a 10-year period that the properties increase in value at minimum 7%. And I know some of you, that's not possible. Yeah, it is, guys. It's possible. It's happening all around the country. It's happening right here in Southwest Florida. It's happening. It may not be happening in your little area you live in, but it's happening. I've been in real estate, guys, buying residential real estate for 25 years. Been a banker for 25 years. Yeah, commercial banker for 25 years. Specialized in commercial real estate financing. So I know what I'm talking about. Right? I'm not trying to be your expert, but in my opinion, I'm an expert at my strategy that I've done for 25 years. I may not be an expert to you, and that's okay. And I don't try to be an expert to you. I'm just telling you what I'm doing. And if someone wants to participate and come along for the ride, then participate. You can email me. Just email address down in the description box. You'll see RF Financial Consulting, which is not the name of the fund. The name of the fund is going to be the Prime Real Estate Fund. But my email address is under my company's name down in the description box of this video. So if you want to help out the housing market, if you want to help prevent the housing market from causing a recession and hurting the whole country, then this is our way of helping. It's through the Prime Real Estate Fund. If you want to be a part of that, drop me an email. I'll send you a quick little email response. And then once I get the company formed, which may take some time, but I'm a patient guy. Once we get the company formed, then I'm gonna start sending out the offering documents. And then it will give you all the meat and potatoes. And at that point, you can take it to whoever you want to take it to, look at it. Either you're in or you're not. If you're in, boom, you wire your investment to us. It'll go in the escrow account and it'll be sitting there earning some interest until it's time to be deployed to buy real estate. If you're not interested, that's okay. No big deal. We keep moving, right? There are more than enough people out here in this country who are looking to make money through real estate without having to own and manage the tenants and toilets. It's a bunch of people out here, especially when you're not ripping people off and just doing shady stuff, which I'm not gonna do. I haven't done anything shady in 4 years. I've been making these videos on YouTube for financial literacy. I've not done anything shady. There's not one person that can come to any of you guys on any platform to say I've done anything shady. I haven't. All I've been doing is just making content every single day for 4 years. Helping people through my experiences, helping people through my failures, showing people how not to fall in the same holes I fell in. Also, showing people how to get back up when they do fall in a hole. That's what I've been doing for the last 4 years on this YouTube channel, right? I haven't been trying to fleece you guys out of every little nickel and dime you got. Every time you turn around, I'm asking you for something. No, the only thing I've ever asked you guys for is Weeble, to try it out. And I do get compensated for that. I'm not gonna apologize for that. But I also use Weeble every single day, right? It's not perfect, but it's a really good, reliable app that I use every single day. Now, you can use whoever you want to use. I really don't care. Why? Because I know how to present opportunity. I know how to go get opportunity. All I'm telling you is you better do something. It may not be the Prime Real Estate Fund. It may not be Weeble. It may not be invested in paper assets. I don't know what your stick is. I don't know what your deal is. I don't know what your goals are. But let me tell you something. If you ain't got no assets, you're going to be in a world of trouble. If something happens in 2024 and you ain't prepared for it, you're going to be in a world of trouble. Just telling you. Just like in yesterday's live stream, I walked y'all through just an overall recession, 2024 recession, not just the housing market induced, but just in general. And I said in that live, you better have some assets. That's the only thing gonna save you. If you don't have no assets, you're gonna be in some trouble. So please, get your game plan together. Get you and get your family in a position where if something does financially change in your life, you got something to fall back on. You got a cushion. You got an exit strategy. You got a pivot strategy. You better have something. You better have something, because I can tell you right now, these people who are tied to this housing market, they're hurting. They're hurting. And some of these people are going to have to actually get out of the industry altogether. They can't make any more money. So they got to go find something else to do. Maybe they come to your industry. I don't know. All I'm telling you is when you're dependent on somebody else to pay you, that's not freedom. When you're dependent on someone else to pay you, I got to sell this house so I can get this commission. I got to close this loan, this mortgage loan, so that I can get my commission. I got to get these people to come in and sign this title work or these transfer documents, or I don't get my commission. Oh, I got to go to work, put these 8 hours in, or I don't get my salary. Guys, that's not freedom. Freedom is when your assets generate the income to take care of you. That's freedom. That's freedom. That's true freedom. That's financial freedom. And if you haven't experienced that, you should do everything in your power to experience it. You should do everything in your power to put yourself in a position so at some point you could control your own financial power. You control your own financial destiny. You control 100% of your time. Hopefully at some point in your life, you will have that. You will know that. You will live that. But unless you do something to change your situation and make it happen, it won't happen. It will never happen unless you make it happen. You got to change the way you think. You got to reprogram yourself. I know a lot of y'all are saying, Ali, this guy's always about this reprogramming. Guys, it's true. We're programmed in this country to do a certain thing, and it's on purpose. I keep telling y'all, we are programmed in this country to do a certain thing, and it's on purpose. And anytime you try to deviate from that thing, which is doing what? Making the 1% wealthy, they shock you. See, me, I'm shock-proof because I got my own stuff. I don't care anything about the 1%, right? I don't care anything about the 1%. I got enough assets to do what I needed to do. And I'm building more assets, right? I'm taking this money that I earn from my efforts, from my high income skill set. I'm taking these money that I earn and I'm putting my money where my mouth is. I'm putting my money in assets. Every single month, every single week, I'm buying assets. I'm starting this prime real estate fund and I'm gonna buy more assets. But we're gonna buy them as a group, all the investors together. I just believe this thing can go to $100 million bucks. I believe it can at some point. I believe the prime real estate fund can have $100 million in real estate assets. Could be higher. I ain't putting no cap on it. I'm just telling you what I believe we can easily do. Because I know the response that I've gotten from a lot of people who've watched my past videos where I've talked about the prime real estate fund. Guys, I got a big old list. I got a list that's growing every day of people who say, put me in, man. Put my name down on the list. When you get everything ready to go, send it to me. Now, I know all of those people won't come through. I'm not an idiot. I'm not that naive. I know all of those people won't come through. But the overwhelming response that I've gotten from people, and that's directly attributed to me and what I do on this YouTube channel, because people know that watch me on a daily basis. Now, the casual person that comes by and just, might watch 5 minutes and make an assumption and buzz out of the video, that's not who I'm talking about. I'm talking about the people who rock with me every day, and y'all know who you are. Y'all rock with me every day because y'all rock with me because y'all like that daily reminder that this thing is real out here, and this guy, I better listen. Yeah, I may not do everything he said, he talks about, but I do know what he's saying is the truth. If I don't change something in my financial life, I'm gonna get the same results I got last year unless I change something. I'm not gonna get different results in 2024 than I got in 2023 unless I change something. So a lot of you guys appreciate that reminder. And a lot of you guys have told me, man, that prime real estate fund sounds exactly what I'm looking for. I'm looking for a passive way to make money in real estate without having to manage the tenants and toilets and worry about the day-to-day. And I want to do it from somebody that I believe is honest and who has a track record of coming on YouTube for 4 years and saying the same thing over and over and ain't deviated from it. And not one time have I asked you to send me $1,500 for whatever. Y'all know what I'm saying, right? I haven't. I got my company, RF Financial Consulting, and it does 1-hour financial sessions. But you guys know I rarely even talk about that. Unless you get to the tail end of my videos, you never even hear about that. Most cases, you don't. And it's designed that way. I don't lead the video with that because that's not my bread and butter. That's not really why I'm doing this. My bread and butter is really this YouTube. This is what I really enjoy doing. This is what I cut my teeth on. This is what I really like doing. The coaching is something that I do when it's a need. The reason I don't promote the coaching is because I know for the price that I ask people to pay for 1 hour of my time, they got to be really serious about changing something in their life. And don't get me twisted, guys. I've helped a lot of people through those one-on-ones. A lot of people sign up. But I don't want it to be the focal point of what I do in this company. The focal point is making the content. That's the focal point. A byproduct of that is what I do with the coaching through RF Financial Consulting. And another byproduct of that is going to be the Prime Real Estate Fund, right? So you got the Prime Real Estate Fund, you got the coaching, and then you got the YouTube stuff, and then you got the affiliate marketing, right? Those are the things that I do. I don't do anything else outside of that. That doesn't mean I won't do something in the future. I am thinking about putting a website together because like I told you guys it may have been a couple of weeks ago, I don't want to be in a position where something happens to the YouTube channel like it did with my Instagram page and I have no access to you guys. Really, at that point, you got no way of getting me unless you go on Facebook. Now, a lot of you got my email address, so y'all are just, because a lot of people have emailed me who follow me on Instagram and said, hey, man, I noticed your page ain't there. We just wanted to check on you, blah, 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 blah. So that was nice. But I don't want the same thing to happen with me on YouTube, and I got no way of connecting with you guys. You got no way connecting with me. So I am going to be creating a website in 2024. I'm going to be creating a full website where you guys will have access to me 24/7, 365. So if you can't get me on YouTube and they don't allow me back on Instagram, they don't give me my page back on Instagram, you know exactly how you can get to me, and no social media conglomerate will own that. I will own it. So all you got to do is just find me there and you got me for life. Now, don't get me wrong. I don't want to not make the YouTube videos. I love the YouTube platform. But, I don't know. You just never know what could happen. I hope nothing happens because I really, really love the YouTube platform and I love making these videos for you guys. And I love the interaction we get. So hopefully that'll keep going. But I also do want to have that website. And the Prime Real Estate Fund will be on there. Any affiliate marketing stuff that I'm working on will be on there. Even we're going to be doing like Q&As on there, specifically to the website. We're going to be doing a lot of stuff on the website that's different than what we do on the YouTube channel, right? It's going to be more a little deeper discussion around investing. Where I'll be in a situation where I can maybe have a whiteboard, or I can have some guests. I can bring in some guests like CPAs, or I can bring in, some financial advisors. I can bring in real estate. I can bring in these people, bring them onto the platform, and just have a conversation with them. It more than likely won't be other creators. It'll be like people who are really actually working in that industry, not people that just say they flip real estate, not them kind of people, but people that really flip real estate, right? That's how they make their living. So I'll be bringing more of those people on, but that's going to be on the website. That ain't going to have nothing to do with YouTube. Ain't going to have nothing to do with no social media platforms. That's going to be where I want to build out a community on the website so that if something happens to one of these social media platforms, I'm not disconnected from you guys. So hopefully you'll support that. That's going to be coming in 2024 as well. I'm working on that right now. I got my oldest daughter working on that with me. She's going to be doing all the administrative and the back end. I've had people come to me, guys, for the last 2 years to do the same thing for me. I just don't trust them. So I'd rather have my daughter do it, someone who I trust with my life, and I know going to have my best interest. I know she going to have y'all best interests at heart. It ain't going to be no shenanigans. Some of these people be coming to you, oh, we want to get you to 20 million subscribers. We want to get you 20 million views a day, all this crap. It's like, no, I ain't going to make you rich, man. Get out of here. I'm not turning my audience over to you snakes. Not doing it. Because that's all it is. That's all it is. And a lot of people just trade that in for the money. But see, I make enough money. I'm good. I make enough money. So anytime these guys be coming to me telling me what they're going to make me, I always know you're going to make 5 or 6 or 7 or 8 times that. Plus, you're going to have my audience. And then you're going to have a mailing list and all that stuff for my audience. And you're going to be sending them all this propaganda behind my back. And I ain't going to even know it. I'm not selling out my audience that way. It ain't going to happen. So I'm going to create my own thing, do my own thing, and do it the right way with my daughter and a few other key people here locally. And I think that'll be a winner for us. So hopefully you guys will support that in 2024. So stand by and look out for that. Well, all right, guys, I appreciate you. I appreciate you. We didn't have a big audience today, but that's okay. Sometimes, YouTube don't tell people I'm on here on the live, and, it is what it is. You win some, you lose some, right? But it's never a loss. I don't care if I got one person in the live. I don't care if I got one person that watched the video. It's never a loss. It's always a win, because that's a person that may potentially get something out of this that could change their financial life. So hit the thumbs up for me. Y'all know, before you get out of here, before you tap out of here, hit that thumbs up for me. I really would appreciate it. It goes a long ways to trying to help this YouTube algorithm get this video and get this content out to more people. It's a daily struggle with them, right? With this algorithm, but I know you guys are rocking with me, and I know the majority of y'all get something out of this. So please hit that thumbs up, just as a way to say, yeah, Richard, I'm getting something out of it. I appreciate you, because y'all know I appreciate y'all. Also, if you want them 12 free stocks from Webull, y'all know that's down in the description box. If you want up to 12 free stocks, Webull is going to give you give you up to 12 free stocks for trying out their self-directed brokerage app. I use it every single day. I would never ask you to use something or try something that I didn't use. So check it out if you want to be able to buy paper assets and do it quickly, efficiently, and on a safe platform. In my opinion, it is, because I use it every day and I've not had any problems with it. Now, I don't work for Webull. I don't do anything other than have an affiliate relationship with them. So I'm just telling you to try it out. If you don't like it, move on. It's that simple. You can put any amount of money on it to get started. Plus, I'm gonna send you that tutorial video. If you send me an email, which is down in the description box, if you send me an email to tell me you've opened the Webull account and you want to get the free tutorial video so that you can get the basic steps you need to take in order to start buying your paper assets. If you email me and let me know you've opened the Webull and funded it, I'll go ahead and send that to you without a problem. It's just a video I did showing you kind of how to use the Webull app, but it's in the app version on the mobile phone. So just keep that in mind. It's not the desktop version or the iPad version or whatever they call it, or the laptop version. It's the version that's on the phone. So just remember that if you do send me the email. Thank you again, guys, for stopping by. Hope you got something out of this. Get yourself prepared for anything that could potentially happen in 2024. Recession, no recession, be prepared, buy assets, build wealth, get to your freedom. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next one. Peace, love, happiness.